is a boutique education advisory that helps aspiring students get accepted into top-tier education institutions globally for high school, undergraduate, master's, MBA, and
Looks like we have about 9 participants. Maybe we'll wait another minute from me and then probably kick it off to see how many more.
Let's do that.
Awesome. Are you all still remote at the bank?
Sorry?
Are you all still remote at the bank, working remotely?
Yeah. Some of us are. It's a mix right now that's happening.
Got it. Yeah.
Different rules for different cities.
Agreed. I'm sure they're really gauging it out based on the state and the office. So that makes sense.
Yeah. We've pretty much been there as and when we could. So yeah. It's not been too bad, I think. I think also from a student perspective, since we move everything out digitally, I think things became much easier for everybody to manage.
Absolutely.
Especially for the students.
Yeah, for sure. And I think the current generation as is likes doing everything online. I remember, I think my parents are probably the only ones who still like going to the bank, but I'm just like, why do you need to go to the bank for anything? You could use your app, everything's online. But yeah, I'm sure
we anyways have always had a minimal branch visit kind of a way of working. So it's always been doorstep service for HDFC Credila. And with the pandemic, we just went a few steps, many steps ahead and made it as digital end-to-end as we could. So yeah.
Absolutely.
That's something that we didn't believe in. Yeah,
it looks like you were prepared, for the situation as well. I think a lot of companies who sort of position themselves that way have done well. So
yeah.
Great. So we're at 4:02. Varsha, maybe I'll just kick it off and then maybe let the rest of the participants join, because it looks like we're at a good 12 to 15.
Yes, please go ahead.
Perfect. All right, welcome everyone. Really excited to have you on this webinar, which is education loan myths, and hopefully we'll debunk some of those. We're joined by a very special guest today, Ms. Chandini Sehgal, and she's joining us from HDFC Credila. Ms. Chandini Sehgal has a vast experience of over 19 years across financial sector and FMCG, and she's been working with HDFC Credila since 2010, and really been script writing the story for HDFC Credila since it's been established as India's #1 dedicated education loan specialist, and also creating the brand HDFC Credila as we know it today. And Chandni currently heads the marketing, communication, and business channels for HDFC Credila, and she's been conferred as the 100 top most influential business leaders in the BFSI sector by World BFSI. So super excited to have you here, Chandni.
Thank you.
And share a little bit more about the company and all the offerings that it has for students, such as the ones that we help serve at ReachIvy. And personally, I'm also was one of those students about 5 to 6 years back. I'm Archana Rao, a senior counselor with ReachIvy. And I started my journey with ReachIvy very much like the rest of the students here. I also pursued my business degree at University of Virginia and at Darden School of Business, before which I was in banking myself. And post my experience at business school, I've been working in private equity and management consulting with Boston Consulting Group, Parthenon, Ernst & Young. And most recently, I'm the senior director for an education technology company based in Boston. So I'm super excited to meet everybody and work here with Chandni to debunk some of the myths around how do we take on an education loan as we all accomplish our dreams of study abroad. So with that, I'll hand it over to Chandni. I believe there's a bit of information that you'd like to share with us, after which we'll jump into a more conversational Q&A type session, and all of you are definitely feel free to jump in with any questions that you may have. So over to you, Chandni.
Thank you, firstly, Archana and ReachIvy for having me here. It's always great to have a platform to be talking to students who are at the stage of planning for their higher education. Because within this, education finance, we realize is a very important part of this whole planning that you would be going through now. So what HDFC Credila primarily does is, as a specialized education loan company, is find financial solutions, guidance to students to plan this whole journey better. Because we do realize that, even at the initial stage, when you are looking at shortlisting universities or country or what course, one of the key things at the back of your head is, how am I going to afford this? How am I going to pay for this education? And things have changed a lot over the last many years. And one of the key reasons why HDFC Credila exists, in fact, as the first dedicated education loan company, was to make this whole journey for students an easy one. So when we talk of myth busters, I think we've had a very integral role in making this process and this journey so smooth that today we can say that, yes, everything that people did believe or did exist is a myth now, because accessing education loan per se is so simplified now with the kind of loan products and processes that you have. Just to take you through a little more in detail on this, Archana, is my screen visible?
Yes, I can see your screen, and hopefully the rest of the students can too. If you can just give us a thumbs up. Perfect.
Great. So what I'm going to do today is, firstly take you through a little bit about what HDFC Credila has been doing, and telling you about how to really plan for your finances. What are these myths that we're talking about? What are the key factors you should be looking at while you are evaluating what is the options available, and also education loan per se. So if you're looking at any education loan company, you should know what questions to ask. So a little bit about HDFC Credila. We've actually funded students going to multiple countries, over 35 different countries across the world. And students are studying across different institutes, they are actually pursuing different courses, over 1,000 different courses. And when we talk of these numbers, what's important to see is the fact that there is an understanding of what is happening in different countries. And hence, based on that, there is a customization of the product and the process that we as a company offer to the students who apply to us. Because while it is one education loan in a simplified way, it needs to be bifurcated and understood in depth, so that the best product, the best process can be offered. So this is what we really stand for. It's a very customer-centric focused company, and this is the way we have progressed over the last 15 odd years and become leaders in the overseas education loan space. So one of the most common factors and the options that we look at for funding education is, of course, scholarships, which is always the first option and always should be the first option. But unfortunately, not everybody gets scholarships. And then we need to start looking at different options. And sometimes, even if you do get scholarships, you get partial scholarships, and you still need to fund a fair chunk on your own. So earlier in the past, it was believed that if you are in such a situation where you haven't got a scholarship, education loans going to be tough to get. And therefore, why not just go, liquidate whatever savings are there in the family, or, get family, it was very common for people to even get money from different people within the family and pool that together and fund education if you got through a good college. But all this has now become things of the past, because even if there is sufficient fund available within families, the option that they are choosing now beyond the scholarship is an education loan. And what really is the reason behind this is, I have a whole list of reasons here actually for you. So there are financial reasons. So we'll understand what these financial reasons are. And in addition to financial reasons, there are also other smart reasons which, in the long term, make a big difference to you. And I'll just take you through the financial ones first. So firstly, and the biggest one out there, is that you get fantastic tax benefits. So the entire interest amount that you're going to pay on your education loan, the entire interest amount, and there is no other loan in the market that offers you this. And even within that, HDFC Credila is one of the few companies who actually authorized to extend this benefit to the customer. So this is a huge benefit. I'm going to take you through this in detail after a few minutes, because I think this is a concept that not too many people are aware of. And you all must know this as to how this works. The second part is that you do not need to pay your entire fee in a big lump sum in one shot right at the beginning. So mostly what you would need to do is probably pay it semester-wise or annually. And that's how you would break your savings, and you'd need to compile a big chunk and transfer it there. But the minute you take an education loan, it's like doing education on EMI. And you're going to pay your principal amount, your EMIs after course completion. There is a moratorium period. And therefore, this becomes a very easy process. So for many families, this may not be very affordable at this stage. Because you're taking a loan, this becomes extremely convenient. Archana, I think a few people are off mute. If you could just maybe put the audience on mute, this will
Yeah,
help.
I've sent a chat, but maybe Gautam, I think if you could go on mute, that would be fantastic. Looks like thank you. Yeah, I think we should be good now, Chandini.
Great. Thank you. So this is a very convenient and a very good reason to actually consider an education loan. The third financial reason is the TCS on remittances. So there is a 5% tax that you pay on remittances that you send abroad. But the minute you take an education loan, it's only 0.5%. So there is a direct saving of 4.5% on the entire amount because of the education loan. So these are three key reasons with a smart financial decision for people. And this is also the reason why many people who have funds with them are now choosing to take an education loan, because just the math of this makes a lot more sense. The other reasons are that this would be your first loan. Most probably, most people, even if you are working professional 2-3 years into your career, you probably have not taken a loan. So this helps you build a positive credit history. So for any future loan that you will take, you will probably get, you will definitely have a higher chance of getting that loan. And also you will get that at a much lower rate in the future. So of course, this is a little future looking there, but it definitely helps you. And we've seen nowadays, given the current situation, not too many people get part-time jobs with ease. So if the plan was to go take those jobs up and then, kind of put that money together and pay maybe the third, fourth semester fee or the second year fee with that, then the chances are a little grim because of the current situation. So it makes sense to kind of be at ease, plan this well, and you're putting so much of investment behind education, you may as well put all your time behind that rather than part-time jobs which are not focused towards education but just focused towards repayment. So that is not something that we really recommend. So this is one of the key things that we would say has changed over the years. The understanding is changing over the years about why an education loan is definitely better than self-finance, against the belief earlier that it was, better not to take a loan. Now, like I was saying, I think it's very important for us to understand what an education loan is. The belief is that you should ask for what's the rate of interest between one education loan company with the other. But in reality, there is a lot more evaluation that you need to do. And while rate of interest is very important, and HDFC Credit Lab, offers extremely competitive rates to its customers, but we suggest that there is a lot more that you should appreciate and understand while you're doing this comparison. So firstly, you need to see, is there a margin money? Are the expenses covered, which are, not just tuition fee, but also living cost, because that's a big chunk of the overall cost and the financial planning that you would need to do. What is the tenor for repayment? Is it going to be a very short tenor, which means that there will be an additional burden on you to finish paying this off in a very short duration? The fourth part is, when does that EMI start? So at HDFC Credila, we actually give the opportunity for people to start paying small interest amounts right from start, which actually overall really benefits, because some amount of small, simple amounts, then get deducted out of the overall amount that you want to pay. It takes the burden away. The amount of flexibility that an education loan is going to give. So, is there a co-borrower flexibility? Does it have to be only my mom and dad, or is there other flexibility? These are things you need to see. What is the collateral? Am I going to get a loan without a collateral or not? How much will that be? And of course, the processing time and the ease of application. And I think the ease of application, especially now during the pandemic, the importance of that has come to the fore even more, because even if you do have the time to go and visit multiple branches multiple times, today, just because of safety, everybody prefers a digital process. So I'll get into details of each one of these, because I'm sure some of these terms are alien to you at this point. So let me kind of decode this and simplify the understanding. So when we say all expenses must be covered, HDFC Credila covers tuition fees and accommodation fees, not just for on campus, but also off campus, because we understand that many students want to study off campus. There are so many other little costs that get accumulated and get added on, like your travel expenses, your, basically your airfare to the university, and other books, library fees, exam fees. There are so many ancillary costs that one needs to keep adding to the education loan, A, so that it becomes easy for you to fund, and B, also because you're getting tax benefits on the entire amount that you're taking on as education loan. Not too many education loan providers offer all of that. There are some who only cover tuition fee. There are some who will only do on-campus accommodation. So this is a very important factor to consider. The next one is margin money. Now, margin money basically is the amount of money that any financial organization asks you to put in from your end, and they say that they will consider funding the rest. So if you need, say, $100 to be borrowed, they will say that you will have to put 20 at your end, and we will fund just about 80. Now that 80 could be only tuition fee, it could be a combination of that, but they are asking you to put in some amount. At HDFC Credila, we do not ask for margin money. So which means that the entire cost of education, literally the entire cost of attendance for that matter, gets covered as a part of your loan.
Chandni, I think we had one question from Praveen, and I don't know if that falls in the margin. He was wondering if this is a no collateral loan, or do we need to put up like a collateral against it?
Yeah. So margin money and collateral are two different things. I'll come to collaterals, but now that you're asking, maybe I'll answer it right here. So there is something called collateral or non-collateral loans. It's also called secured or unsecured loans, which means that you need to put in some collateral like your, say, a house or an FD or land against as a safety for the organization who's funding your education. You have to offer that to them. So at HDFC Credila, there are a huge and a very, very large percentage of students who actually get unsecured loans. We offer both, and there are benefits of offering both. If you want an education loan, which is over and above the capping that we have for unsecured loans, because unsecured loans requires evaluation of the student's profile and
Can you please mute yourself?
yes.
Any participant who's not muted themselves. Thank you. Sorry, go ahead, Chandni.
Yeah. So not everybody is eligible for an unsecured loan. So instead of declining a loan, the second option that comes in there is, can you offer a collateral, which basically increases your chances of getting a loan. Right. In many cases, offering a collateral additionally can also give you better rate of interest. If you need a loan which is of a certain amount and you need it much beyond that, so we give unsecured loans up to 50 lakhs. And supposing somebody needs, 1.5 crores for undergrad overseas, you would need even up to 2.5 to 3 crores. So giving a collateral security is critical in such cases. So yes, we do both, to answer your question.
Great, thank you.
Yeah. So another myth that is there is that one should apply for an education loan only after you've got your admission confirmed. Now, this is something that did exist in the past, yes. But many years back, HDFC Credila, in fact, was the first one who changed this. And we realized that students need to show proof of funds to many universities. Also, there are families who feel that this education, and it is expensive studying overseas, it is not affordable. So they would either postpone the plans by a few years, and students who are working would continue working for 2-3 extra years, just so that they had some savings put together. There were also times that we've seen they would, go for a little lower level of university so that they didn't need to pay a higher fee. And given this, we realized that what if we change this and we offered students the opportunity to apply early? And so that's what we have now for many, many years. So most students who apply to us today apply soon after they've got their score. So, the minute you'll have your GRE done or your IELTS or TOEFL, you should apply for an education loan. This helps you in understanding whether you will get a loan, because you'll have a quick loan evaluation based on the university, the country, the course that you're going to, your scores. So we evaluate all of that and we give you the sanction right there at the beginning. Secondly, if you want to show proof of funds to a university, then you don't need to keep funds there, in a liquid form in your bank. And it's a huge amount of money that you need to put there, and you lose so much of interest because you are, then pulling it out of some other investment. Instead, you take the same sanction letter. We give you solvency letters, basically, which are equivalent to proof of fund letters for your universities. And you can show that you have sufficient funds by just showing this letter. And universities accept this. In fact, they know that there is 100% guarantee that this fund is available, and that too just for education. So it is acceptable there by universities. It also works for you at the time of your visa. So in one step, at an early step, you get cleared with all of these worries. And in case you haven't got an education loan, I think this also gives you that opportunity to look for other options then, without banking on something like this at a much later stage and then getting a surprise that, okay, this didn't work out for me, and you don't need to then fluster. Or if you haven't got a loan which is sufficient or to the level that you were expecting, then you can, whatever little extra money that you need to put together, you have opportunity to put that together there for yourself. So this helps you plan your finances in a much better way. So this is something students have now appreciated, and we do see that a large number of students apply to us very, very early, even though it's not a long process. So it's not because it's a process which is going to be time consuming. It's just to put you at ease so that you're well planned, at least in this direction. So just to elaborate a little bit more on this, there is a perception here, again, a myth that, once you take this loan sanction, you have to take the entire amount. Now we understand when you're applying to universities, there are different costs. Some will charge you maybe 30 lakhs, some is 40, another one is going to be 60, and you're not going to know at that point how much you will need exactly. And if you are applying for a higher amount, because my highest out there is say 60 and lowest is 30, and so you apply for a 60 lakh loan, based on how much amount is sanctioned to you, finally, you can take a call. So if it's finally your choice is to go ahead with the one which is costing you just 40 and you've been sanctioned 50, you can choose to take only 40. So that choice is yours basically by the end of it as to how much of a loan you are going to take. You are not charged your rate of interest when the loan sanction is given to you. Loan sanction is one stage. You are charged your interest only after you take your disbursements. So a disbursement is basically when the money is transferred to you or to your university and you take the money from us. So, and that too is done in tranches. So what HDFC Credila offers is the fact that you can take your money in tranches, not in one shot. So if you need 20 in the first year and 20 more later, take 20 now, because then you're paying interest only on that. And the interest on the remaining amount will only start when you take the rest of the amount as disbursement. So these are important.
A quick question there from Nishant R. So to your point about as soon as a student has given the GMAT or the GRE and has applied to the loan and they've got, say, X rupees from HDFC, and the total cost of the education will only be determined once they know what exact university they're going to, what are the living expenses, so on and so forth. So how is that situation dealt with? So you say you've been approved for 50 lakhs and then you realize it's actually going to cost you a little bit more. How does that work? Like, can one get back to HDFC and talk about the additional amount that they need?
Yeah, so it works like this. Firstly, it is fairly clear from the universities what the tuition fee will be. The minute you come to this stage, you know what the cost will be. What you may not know is your living cost, because your living cost based on the city that you're going to go to is going to vary. But that's where HDFC Credila has done the work. So we know that a student who's going to go to X university, and if he's saying that, he wants to prefer to live on campus, what will that average cost be for that city? And so when we are sanctioning, we add the appropriate amount to your loan if you want all of it covered. And that's the help we also give you there. However, we haven't come through situations where students don't have a clarity on this. And I think this is where you should do your groundwork a little bit in advance. Once you're preparing for your tests, also start doing groundwork around this. Have a fair amount of idea, because today it's not difficult to connect either with the university or with students representatives who have studied in a similar university, maybe your seniors, etc. We don't have situations where people don't have a clear cost. And anyways, you're going to apply for a higher amount. So it'll be based on your eligibility. So if your eligibility is more and you really feel you applied for the wrong amount, you can always, then make a request saying, am I eligible for more? Can I get a higher loan? But honestly, these are rare situations. We haven't really come across these.
Got it. Great. Hopefully that answers your question, Nishant. Thank you.
Yeah, so basically, just to stress again, a sanction letter is not legally binding. It is your choice as to how much of a loan you want to take. And the same letter acts in as a solvency letter. So we really highly recommend you to start this journey early. So if there are people on this meet today who are looking at a fall 22, this is the right time for you to start. For those who are probably looking at a spring, this is not too late because the process is early. I mean, the process is quick. But for those who are looking at fall, do start talking to us on this soon, because I'm sure you will have a fair idea about which country, university you are shortlisting for yourself at this stage. Now, this is the part I was saying everybody must understand: tax benefits. This benefit is absolutely fantastic, and not too many people are aware as to how this works. So tax saving is basically done on education loan on the entire interest amount. Now, on many other loans, either tax benefits are not available, or there is a upper cap on how much of a benefit that you can avail. For an education loan, and this is a benefit that HDFC Credla can extend, because we have the authorization and the Gazette notification. And this is important to know because not every education loan player has the authority to extend tax benefits to you. So you should definitely not lose out on this and only, take an education loan from somebody who can extend this. There's a certificate to the right that I'm showcasing, and that's how the certificate looks like. And you must actually ask and say, can you show me that certificate, because you want to be sure. So this is something that we share with all our customers. The tax benefit can be availed by not just the loan applicant, which is the student, but also the co-borrower if the parent is paying for the loan. And in many cases, that does happen. Initially the parent will pay a certain amount, and then later on the student is earning, and then he wants to pay this the loan amount. Then depending on who's paying, that person can avail of the tax benefits. So there's fair amount of flexibility around this. Another factor is on loan eligibility. People believe that loan eligibility, many people say, in fact, why don't you just show us your rate of interest right there and tell us what is your rate of interest while we are applying to you or before we apply to you? So the reason why we don't do that and ultimately offer very competitive rates to you is because education loan and every application that we see, we believe that it needs to be looked at in a very different way, so that we actually offer tailor-made solutions to every applicant who comes to us. So depending on a permutation combination of multiple things like your academic records, your current test scores, which country you're going to, which university, which course, you need to look at employability, and also the co-borrower profile. Is there a collateral? There are multiple things to see there. And it is after the analysis of this that we offer the best rate to you. If we offer one standard rate out there, you'll probably end up getting a higher rate. The idea is to give the best possible rate for you and the best and the highest amount of loan that we can sanction. So that's one of the reasons we don't give that one single rate out there, because it's tailor-made solutions that we offer. So these are the number of things that we look at. This, in a way, is also your document checklist. So when we ask for documents, it is related to your academics, it's related to your parents' KYC, your own KYC, collateral, if you are offering that. Like I said earlier, it is not compulsory, but it definitely is beneficial, especially if you're looking at a higher loan amount.
Chandini, before we move on, we have a question from Omkar. I believe this is related to the tax slide that you showed earlier. Sure. Omkar's question is, does the loan taken in India benefit my tax savings if I'm looking to save tax on my earnings abroad? So I'm guessing this is limited to Indian tax, but I just wanted to confirm.
It is absolutely limited to Indian tax. But we have seen that, savings come back to India and people do pay through their Indian accounts. And parents also pay through, Indian accounts. And that's why I was saying that the parents can avail of these tax benefits, and people end up, getting these benefits. Also, since you've, raised the question about tax benefits, we have a calculator. In fact, it's been the first calculator on tax benefits and the savings that you can make through it. It's on a website. So you should go to hdfccredla.com and try out the tax calculator and just see how much you can save when you take a loan. We have also covered out there in detail the nuances as to who can avail this and how. So just a simple 5-6 questions which are most commonly asked. So all your queries around this will be cleared out in detail.
Perfect. Thank you. Yeah, you're right about maybe the tax not, even if you're taking the loan and your parents can avail the tax benefit, I think it's really worth something as well, right? Like,
Yeah,
they could probably write it off in their tax statements. So that makes sense.
Yes, that's right. Now, the application process at HDFC Credla has always been simplified. So even when we started off, we said we are not going to have a branch visit kind of an option. We are going to offer doorstep service. So we understand, students are busy with the college routine, parents busy with their offices, working professionals who are looking at higher education have a packed schedule themselves. So we said, let's simplify this process. And so doorstep service for explaining products, for picking up documents, all of that was being done. You literally just came to office after your loan was sanctioned, and you had to sign your papers at a branch, and that's about all. However, even this is simplified to the next level now, because people are applying to us online, they're submitting documents online. You can even sign your agreement with us through e-signatures, and that's the level of digitization that we have brought into our process. And especially now during the pandemic, the year and a half that we've gone through this, we've introduced a much simplified process, and students have been able to avail loan from us with so much of ease because of this process. So yes, this is something that we are very proud of, and we are continuing to simplify this even more for the people, our customers. So don't worry if you are, in that mode. I know the pandemic right now is in a much better situation, but some states are still going through difficult times. And so don't worry about it, because it's simple. You're not gonna have a problem because of the process or the fact that you can't visit a branch. Either ways, you're sorted here.
And to that point, Chandini, one of the students, Nishant, has a question around what documents are expected in the second step. So it says here doorstep service. So I'm guessing, is this still happening in the pandemic? And if yes, what documents would you be asking for in that step?
So doorstep service, yes, on and off has been available depending on the situation. We've looked at our customer safety and the employee safety. So now that things are much better, of course, this is on offer in most places, but people are still choosing to apply online in many cases. So both options are available. As far as document types are concerned, like I was mentioning earlier, we look at KYC of the applicants. We look at the academic scores. So you need to submit those. If there's a collateral, you would need to submit that document. And so that's broadly the list that is there. There are financials. So when we say KYC, there are also financial documents about the co-borrower, because there is a co-borrower that is necessary on any loan that you take from an Indian education loan company. So those documents are required. We find that many applicants themselves are working professionals. So it's not just the co-borrowers, but if they also submit their own financials, it definitely helps. So those kind of financial documents. So it's a comprehensive list.
Sorry to cut you off, Chandni. To that point, Samreen has a question that, is a co-borrower mandatory? And if they don't have one, how would that work?
So yes, a co-borrower is mandatory. Um, any Indian loan company cannot give you a loan without having a co-borrower on board. However, having said that, sometimes it is at the strength of the student's profile that we evaluate the loan. So you may be going to a top-notch university, you've got great scores, and in many cases, we've given unsecured loans to students based on their profiles, and in fact, many loans like these. So if there has to be a co-borrower, but the co-borrower's profile and the weightage to that depends, on case-to-case basis as to how much will that be required. The second thing is sometimes we've seen parents are very close to retirement age. And people may feel that the co-borrower may not be a strong addition to basically to strengthen their case to get a loan. And in such cases, we actually offer flexibility where students can have maybe their uncle or any other blood relative come on board, their own brother, for example, come on board as a second co-borrower or as another, as the only co-borrower. So this option is given, and we've seen this has really eased things out for many applicants who come into us.
Right. So it is flexible and obviously customized based on the applicant's personal situation.
Yes,
that makes sense.
And we've seen most applications begin with getting parents on board. So if you feel that this is not working out, then we recommend and we ask if somebody else can. And many times it does work out.
Got it. Hopefully that answers your question, Chandini. Thanks, Chandini.
So we were talking about the kind of documents. I think I've already covered that. The KYC, income, academic, and collateral documents. In detail, again, you can have a look at it on a website. I can probably also post the link here, and that will be useful. This is almost like a standard list across all education loan companies. I think everybody asks for the same documents out there. How you look at the documents, however, may be different. So, for example, collaterals. Somebody may say your collateral value should be 120% of the overall loan that you're going to take. Somebody may say 100%. With HDFC Credila, there have been cases where we've actually taken a collateral value which is lower than your loan amount also. So we are flexible there in the collateral value too. And of course, these things happen on a case-to-case basis. We see where we can extend this flexibility. So it's not a rule, but it's an option.
Yeah, and really depends on the student's profile, like you said, which university they may have qualified for, their academic background. So it's worth sort of finding out.
Yes, absolutely. Absolutely it is. And most people start with believing I will not get a loan. It's a huge amount of loan that you're applying for at a very young age. So I think the first myth is I will not get a loan. No, there is a high chance you will get a loan based on your profile, especially if you're going to a reputed institute, to a course which has a great potential in the future. I don't think these are things you should worry about. It is worth going and applying for that loan, because I think the number of surprises that we have given to people, pleasant surprises there, and wow, I got a loan, unsecured loan, just based on my profile. I think it's been fantastic. So you may be one of them. So I think that's definitely an approach that one should have towards an education loan. Multi-city co-borrower is important. A lot of people feel, I'm based in one city, my parent is in another. How is this loan going to work? How will they give the application? How will they sign? This is easy. And not only from the point of view that this is digital now. Of course, when everything is digital, things become even more easy. This has been easy even otherwise, because we have our teams who sit and coordinate this, and they are based in various cities. So once you apply, that's not, just your headache. We assist you in this process. And in almost all cases, we've seen, or rather very, very large number of cases where the student will be in one city and the parent another, or the co-borrower another. So And if there are two co-borrowers, sometimes two co-borrowers are in two different cities. So don't worry about it. This is fairly simplified, and this is not a barrier to you applying for a loan.
Yeah, clearly location agnostic. So that's fantastic.
Absolutely.
Another question, Chandini, from Nishant, who's asking, in the requirements for the academic docs, apart from the GMAT GRE score, when you say academic documents, does it imply undergrad degree along with your high school grades? So for example, your 10th, 12th, and undergrad? And I'm guessing he's asking for a master's loan.
Yes. So there is a standard requirement based on the course that you're going to pursue and the level of course. And that is then detailed in the document checklist that is offered to you. And that's a standard ask that is there.
And that will be the same for undergrad as well. Tanya has a question, what academic documents are required for undergrad? So I'm guessing your high school
documents. Your high school documents, your 10th and 12th, of course, is critical. And you would have taken your test, and so like a SAT, etc. So those scores are very critical.
Got it. And looks like the questions are rolling in. So I have another one from Kiran, who's asking, do we have to pay any other interest while we are studying?
So what we recommend is that a simple or a partial interest is paid during the course. And these are very small amounts. So depending on the affordability, this is structured as a part of your loan. And we are flexible around it in many cases. And this really helps because, there's a little amounts that you're paying through the course period before finally later the large chunk kicks in. So this amount, because you've already prepaid in such simplified, simple interest at an early stage, it reduces the that burden to pay a larger amount of interest at a later point. So it is highly recommended. Not everybody offers this, but we do structure our loans more often than not in this way.
Got it. And I have another question to that effect. I remember in some loans you could probably pay off a small chunk of your principal amount as well. Is that an option with HDFC? Because I know a lot of students might do an internship, maybe get a huge chunk of money and want to put it to good use. Is that an option as well?
Yeah, so we do structure some loans in such a way that you can pay a higher amount. Yeah. So sometimes it's a structure that we offer, and it needs to be followed through. Sometimes it's an option that we give there, checking how much that they can pay, and so it works both ways depending case to case.
Got it.
Yeah. But most believe that this is not a good option because you're paying some amount, somebody's asking you to pay earlier than later, but it actually works out much better. So we recommend it, we explain it when we are structuring the product. So people opt for this. So that's how almost all our loans are structured now.
Yeah, I think very early on we realized the time value of money, and then you realize, well,
yes, that too. It just eases off that whole process of paying, and then it almost gets automated. So it's not a worry at a later stage.
Got it. Chandni, we have another question from Vinaya, who's asking, would there be any problem to get a loan if my father is retired? I think you touched upon this briefly, but if we could repeat that for her.
So we do come across many cases where parents are retired, they're close to retirement age. And there are multiple things that we need to see when we look at, whether the parent has retired or not. It's not just about that. It's about, affordability and what are the savings. And so those are aspects we do look at. And it's a very common situation, like I said. If we really feel in a situation we need to get an additional co-borrower, then we do request for the same. It's not that we haven't sanctioned loans for students who've not had their parents retired. It happens often. So don't worry about it. I think what you should do is apply without worrying about these little things, because this should not deter you. This is something for us to evaluate. And this is definitely not a conclusion you will be able to make without And we also, I mean, I can't answer this for you specifically right now because I don't know your overall profile. So a yes or a no is difficult to make. But in many, many cases, students have got the loans, even though the parents have retired.
Great. Great. So Pravinya, please go ahead and do that quick application, and hopefully, you'll know either way, right? What the situation is. We also have another question, Chandni, from Darshan, who's asking, what are the key or the most important parameters on which one would avail the unsecured loan for 40 to 50 lakhs? I think that's what you mentioned. And that he's starting the loan application process in December for his master's. So how should he start preparing for the process, or anything else that he needs to have in place? And I guess if you could answer it generally as well, that might help students with the overall process.
So firstly, there is an online application form. You can either go to a website and fill that out. So the minute that happens, you will get a call. And we will have somebody, assigned to you, a relationship manager assigned to you, who will then handhold you through this process, who will tell you the exact document checklist that you need to prepare, what documents basically there. And you will anyways be sharing your requirement that you're looking at an unsecured loan of a certain amount. So they'll be able to tell you whether, once your documents come in, whether you'll be eligible for that or not. So it's basically that process that usually follows. The key things that we look at when we look at unsecured loans is, because the important thing to see is we're looking at your future employability, whether this loan will be easy for you to pay back in the future. Now, for that, we need to see which university you're going to. So is it a top ranking university? Within that top ranking university, is it a good course? You could be going to a great university, but pursuing a course which is not very popular. So it's a permutation combination of both. And we have also done enough study around that. So we evaluate that. We look at the country that you're going to, because your work permits, etc., all those things can vary based on that also. So it's heavily based on the student profile that your unsecured loan is extended to you. The co-borrower profile there is also important, but may not always be from a financial angle. Sometimes is because that they will be able to afford to pay this in case there is a delay in you getting a job, etc. So a large part of this is the student profile that we are going to evaluate. So your document checklist is not going to vary too much. The only difference will be the collateral. So there you will say that I'm not offering a collateral and therefore not giving those papers. Every other document checklist that is there is going to be a common one.
Great, that's helpful.
Yeah. So moving on to repayment, you have EMIs that are structured for you. Now, the longer the EMI, the lesser the burden on you to pay in large chunks. We understand that in the initial stage, you will be earning an X amount, and that's only going to grow in time. And then, repayment of a loan is going to be much, much easier. So what we do offer is a much longer tenor. So in many places, you will probably get only, say 7 years, 8 years to repay. We offer much longer tenors because sometimes people are taking a loan, which is a very large chunk. Having said this, it doesn't tie you down to that period. You may feel I've taken 15 years because at this point I'm just comforted by the fact that I want 15 years. And you realize after 8-9 years that, this is something I want to close. I can easily pay off my loan, and you may just want to do that. So that's a choice that you can make. You can shorten it up. And to be honest, we see people paying a little early. most people stick on till about 8 odd years because till that time you can get tax benefits. So it is suggested that you stick to that period, avail the tax benefits that you are getting, and even if you can afford to prepay, and so that's our suggestion, but the choice is always yours.
And maybe by then, students possibly are taking on more loans for maybe a house or other things. So maybe that's going
yes. So some people also want to continue just for that, because then you like, okay, I'll pay a certain amount there for another loan, and you bought a vehicle or a house, and yes, other such things. So it just makes it easier that way. So overall, unsecured loans now actually over 50 lakhs is something that we are offering. There is no upper cap on the loan amount. So, if you need loans even up to 2-3 crores, if you're going for undergrad, you do need that. For MBA, 80-90 lakhs is very commonly seen as application amounts. All of that, including your tuition fee, living cost, all of that is covered. Like I said, apply early, because your loan approval can be done before your admits come in. And in addition to everything that we've covered today, what's important to see is how smooth will this journey be for you in terms of servicing and paying your loan. After you've gone to another country, you're going to be in a different time zone. You're going to have absolutely no time to bother to do anything about your loan, because everything is fixed and you don't want this to be a bother. So what we offer is a web-enabled system, so that even if you have a question or you want to request for another disbursement to happen, an additional one later, all you do is, through a click of a button, make that request and you sort it. So you don't need to worry about time zones and who can I talk to and when and all of that. So it's a very simplified process from the beginning, when a relationship manager is assigned to you specifically to handhold you through the process till the disbursement, and then leading you on to a web-enabled system. It's a smooth one. So through our doorstep service, we still, and now all the more through digital, it's literally education loan home delivered that we are bringing forth there. Affordable, a smart choice more than anything else. And it's good to see more and more students make this choice. And after getting educated about the benefits, it's important to compare. It's important to understand. And I do hope the session today has, helped you get to that level to understand about education loans in India. One last aspect that I'd like to cover is a comparison between an INR loan versus a non-Indian USD loan, for example. This information is not very easily available to students. And so I thought, let me, actually put together a chart showcasing this. So firstly, when you take a loan amount, just for comparison's sake, I've put in HDFC Credila. And HDFC Credila offer may not be always equivalent to any other Indian company. They may be more expensive, covering lesser. So I've taken our example versus a standard dollar loan company. So firstly, a loan amount is going to cover your entire cost of education, tuition fee, living cost, other costs, etc. Whereas in a USD loan, it's only tuition fee. And that too is done on an annual basis. So you will get your first year fee sanctioned, and then after that, there'll be a reevaluation, and then the second year fee is sanctioned. And that can be open-ended for many people. It can actually make you a little anxious about, will that money come to me? How am I going to pay the second semester fee? So an Indian loan that way covers it completely at HDFC Credila. Then you go stepping ahead into a different country without worrying about what's going to happen to your fee later. Processing fee is very affordable in comparison. And also the interest calculation. So this is important. The interest calculation at HDFC Credila is at reducing balance and not at flat rate. This in itself makes a big difference to the entire interest rate and the interest that you are paying. So In addition to this, the tax benefits are not there for dollar loan companies, but they're there within HDFC Credila. And I think if you look at just these two things clubbed together from a financial angle, this makes a big difference.
So Chandini, about the interest, Purnima had a question. For example, if you're looking at an MBA loan, what would be the percentage of interest? And I know you said there's no fixed percentage and that it really varies by student, but is there a range that maybe you could provide typically?
So for an MBA overseas, I would say an average, a range between a 10.5 to 12.5, 13, depending on case to case is what is there. If I was to give you an average, it would probably be around 11, 11.5. And let me take that figure as an example for you now. So supposing you are getting a loan at 11% and you are availing tax benefits. So technically, you are getting a loan at less than 8% because even though the interest rate is 11. So if most people fall in the 30% tax bracket, so it's basically a minus 30% on that. So that's the calculator I was talking about, which is there on our website. So if you can just go try that out, you will know your effective rate of interest that you're going to pay because of these tax benefits that you're getting. And that should be your comparison point also when you're comparing an Indian loan, which is offering tax benefits versus the dollar loan, which is not.
Understood. And she also had an additional question, and I think you answered this a little earlier. During the study, we need to pay an EMI, and I believe you said it depends on the way this loan is structured, right?
I'm sorry, your voice was breaking in between. I couldn't hear the question properly.
Got it. Let me repeat that. So Purnima also had a question, whether during the study tenure, do we need to pay an EMI?
So there is a interest amount, either the full interest or a partial interest amount that many students pay. Like I said, we do structure many of our loans like that. And yeah, it's a smart way of starting to pay and to reduce your future burdens, just to answer that again.
Absolutely. Absolutely. Great. I know we're also at time. It's 5:02, and I want to be conscious of Chandni, your time, and also the students who joined us.
Yes.
It says, I think, yeah, interest rates. I think that was one of the, and currency fluctuations. So maybe that's a great one to sort of end at here.
Yes, absolutely. So I think net, this kind of shows you how, Indian loan company is much more affordable. So this is just an interesting calculation. And I think I've also covered everything that I really wanted to convey. And I hope this has been a useful session for our viewers.
Yeah, we hope so too. We got a lot of great questions, and I didn't even have to dig into my list of other questions I was going to ask if students didn't have questions, because they had so many. So thank you so much for the participation and the engagement, and Chandni for all the great information. I know this is a very daunting step in study abroad. How am I going to fund it? How will I pay for it? But with institutions such as yours, it just sort of makes that step a little less scary and less challenging to think.
Yes,
so thank you very much for sharing.
Thank you so much. And thank you for having me here. All the very best to everybody who has been there in the session today. I hope we can make your journey an easy one. And I hope, your education dreams come true overall. So all the best for that.
Great. We're getting a lot of great feedback. So thank you from a lot of students. So great, Chandni. Thanks for sharing all that. And hope everyone has a fantastic weekend. Have a lovely Saturday evening. And we'll see you all soon.
Thank you.
Thanks,
Bye.
Bye.